you have to look at the big picture, and the big picture is that in the month of March, it was all about global macro concerns, problems in the US banking system, takeover of Credit Suisse by UBS. So what dominated the headlines for global financial markets was not local news flow. There was hardly any new, there was hardly any disturbing local news flow. It was all about global news flow. And global markets have not fallen apart, but the Indian underperformance continues. FIs have not been rampant sellers, yet benchmark indices and institutional dominated stocks, which is a combination of IT and to some extent banks, they have not really found any large trend per se. Third, you can smell that the markets now are showing signs of fatigue, and there is a, not a scare, but there is a proper there is a proper lack of ownership or lack of buying in any of the small and mid cap stocks. So whether it is on the HNI front or on the retail front. So the headline is that India underperformance continues. This would be the fourth month Nifty is all set for a negative close. We are underperforming in a month where global news was the concern, not the local news flow. And more than FI selling, I guess it's a local crowd now which is feeling the heat of volatility, is getting tired, is in no mood to participate, and I think is getting reflected. These are phases in the market, Anisha, where you would say that nobody is really interested in participating. Everyone is asking a very basic question: where is the risk reward ratio? Is it in a debt mutual fund or is it there in paying my home loan? So when there was a trend, which was a smooth trend, which we saw couple of months after that COVID fall, which in a sense made work from home, work from home employees to start adopting trading as the second profession. All that, I guess, has got challenged now.
And clearly that's visible in the volumes, no momentum, no participation, no interest whatsoever, and no interest with respect to how the SGX Nifty is also moving. A very, very tepid start at what it is suggesting, an up move of 14 points. Remember, overnight, if you look at the cues coming in from the US, they were also pretty sideways. We saw a 40-point downtick for the Dow. There was a bit of an inch up when it comes to the US yields. Remember, the 2-year yield has already spiked over 4%, and even if you look at the 10-year yield, that was around that 3.57 mark. In fact, globally speaking, the other news point that everyone is talking about is crude. Last week it was what, at $71 to the barrel. Suddenly it spiked to the level of $79 now. So quite a bit of rally is what we are seeing sustaining as far as crude is concerned as well. This morning Asia started a tad bit mixed, while Nikkei is showing a gain of almost 115 points. Hang Seng is up a solid 400 points. Let's see where India goes from here, because for now the SGX Nifty is very tepid, just around that 17,000 mark. But as we pointed out, it's the day of the monthly expiry, so let's talk about the F&O rollovers as well. The Nifty rollover stands at around 61%. The 3-month average is 57%, so it's pretty much in line with what we have seen. If you look at the March expiry so far, Bank Nifty has underperformed, though in the last couple of days we have seen a bit of an outperformance from Bank Nifty. But for the expiry month so far, we have seen a 1.5% decline for Bank Nifty, while the Bank Nifty was down around 2.5%. The range has been very, very narrow, in the sense that 16,800 on the downside to 17,500 on the upside as far as Nifty is concerned. And for Bank Nifty, 38,000 thereabouts to 40,000 is something that we have done. So Nikunj, with respect to the rollover data as well, does it give you a bit of a conviction that perhaps April is going to be different? It's going to be the start of earnings season. We have the MPC meeting in the coming week.
Nisha, what's puzzling me is that we've had 4 months of decline, and 4 months of decline have rarely happened. And when 4 months of decline has happened in the past, that has always happened because of a global event. Whether it was 2008 or when we saw this kind of a decline when there was an issue in terms of taper tantrum. Now, globally things are not falling apart, which means the selling in the market, I guess, is largely a function of lack of buying or lack of interest. Lack of buying, what drives interest in the market is always performance. And since the performance in the short term has been anemic and India is underperforming, nobody really wants to commit to capital, because trading this market has not been a very gratifying experience. If you are buying into small and mid cap stocks, it's very hard to find winners because the general trend is that small cap stocks are headed lower, and on a daily basis compulsions of PMS redemption and compulsions of retail unwinding is having a more collateral damage rather than anything else. The interesting bit for me is that Nifty futures for the month of April, we look at that, is still at a premium. Why? Hello. If the disinterest is so high, if the lack of participation is evident, why are Nifty futures trading at such a strong premium, both for the bank Nifty and the Nifty? So markets are telling you that, look, let's think contra. Maybe it's time to buy the Nifty. 4 months of straight line fall, global cues are set, and April you may actually bounce back. I will not be surprised that if you will get a bounce. Why? Because there is just everybody's on the same side of the boat. Nobody wants to participate. Nobody wants to commit to fresh capital. FI positioning in the FNO market, 90%, very, very negative. FIs have stopped selling in the cash market. The expectations from earnings season is almost zero. And globally, the crisis which was there, so far it appears it's got stemmed. And valuations with each passing day, because you're growing, they're getting more and more reasonable now. So I think we are nearing that end of decline. I think I'm very clear. Now it's a matter of judgment when you want to throw in your ring in the hat, so to speak. B, you may see some more pain because that could be more not price pain but time pain. But I think we are nearing that part of the market where markets are overdue for a correction. They've gotten correction, consolidation has happened, and now you're getting ready for the next frog leap, so to speak.
Getting ready for the next frog leap, that's the most important thing that the market is watching out for, and we're watching out for what was happening with the Adani Group of companies as well, because yesterday all of those stocks were down anywhere between 4 to 10%, but now there's a clarification coming in from the management. They have strongly refuted news reports on non-repayment of dues and pledge shares. They are saying that they have announced already to the exchanges with respect to what kind of repayments they have done already, as well as the level of the pledge share which has come down. For Adani Green, the pledge position as of 31st December, for instance, was 4.4, which has come down to 3.4. And even for Adani Ports, from 17.3, it's all the way down to 4.7%. So the management is backing that. We have already repaid a huge amount of sum which was due, and even prepaid a lot of it. And the pledge share positioning has also come down. Nikunj, we started off the year suddenly with this bazooka coming in from for the Adani Group, but things were stabilizing for now. But it suddenly feels like there's a cat between the pigeons, and suddenly again the Adani Group of stocks were declining yesterday.
See, Anisha, the sentiment for Adani Group of stocks is fragile. We pretty much know that. But the concerns which in a sense had hit the stock, is that concern getting clarified? The stocks yesterday reacted because of a media house raising a red flag or doing a story which talks about the claims what the Adani Group of companies have had in terms of their pledge position. That is something which is factually incorrect. And that spooked the market because the markets are nervous. There are no buyers in the Adani Group of stocks. There was one large buyer who came in, and after that we've not seen too much of follow-up buying. But if I'm putting facts on the table, well, the Adani Group has come out and said that the group, they've come out with a clarification, and they've really said that the report, what a media publication yesterday published, is factually incorrect. So I'm simply reporting facts out. I don't think you will see a very big rally per se after this clarification for Adani Group of stocks, but it is important for us to point out that after that report, Adani Group has come out and they've said that the report, in a sense, or the media house which published this report, factually that is incorrect.